done an introduction now, very high level of financial instruments, and now we're going to dive into a little bit more detail. We're going to start off with our financial assets. So remember, we're talking from the perspective of the investor, the holder of that financial instrument. Okay, so for him it will be a financial, let me just get a different pen, a financial asset. Okay, so what does IAS 32 tell us about financial assets? It says it is any asset that is cash, so like a savings account, an equity instrument of another entity. Okay, this is what we've dealt with in our introduction. So the holder is invested in shares. Okay, so this is shares of another entity. Whenever you have the contractual right to receive cash, so that is, for instance, where you have trade receivables or a loan receivable. Okay, because in terms of a contract like that, you have the right to receive cash. Okay, so the customer has to pay you, okay, or the party to your loan agreement has to pay you the principal amount and the interest on that loan. Okay, and then the two other things that is also included there, but we don't really encounter a whole lot in our CTA studies, is to exchange financial assets or liabilities under favorable conditions, or a contract that may be settled in the entity's own equity instrument, which is a non-derivative for which the entity will receive a variable number of shares. Okay, but we're going to focus on these three, okay, because these are the most common ones. Okay, so let's look at a few examples to make sure that we understand the, something's happening. There we go. Make sure that we understand this definition of IAS 32 for a financial asset. So we have Company X. Company X purchased 2,000 shares in Matrix Limited. Now the question is it a financial asset, yes or no? And then provide me with a reason. Okay, well, it is yes. Why? Because it is an equity instrument or shares of another entity. Let's look at the second one. Company X provided a long-term loan to Alti Limited and it's repayable after 2 years. Okay, so yes, it's a financial asset, but why? So go quote me the definition. Well, it's a loan, so you have a contractual right to receive cash or a financial asset. Number 3, sold goods on credit to a customer or customer A. Yes, it is a financial asset. Why? The same reason as a contractual right to receive cash or other financial asset. So they've saved some surplus cash in a savings account at Metbank. Yes, it is a financial asset, and the reason is it is cash. Okay. They've invested in government bonds. Oh, this one is tricky. So where would it fit in? Is it cash? Is it an equity instrument of another entity? No. It is a contractual right to receive cash. Okay. The cash that you will receive is the interest and also the principal amount. Okay. Then the last one, prepaid insurance. So let's think about that one. Prepaid insurance. You've prepaid an expense that is shown as an asset on your statement of financial position, but is that a financial asset? No, it isn't, because there's no contractual right to receive cash or a financial asset. There's just a contractual right between you and the insurer for the insurer to give you the services that you've paid for, but there's no contractual right to receive cash or a financial asset. Okay, so a tricky one, but apply the definition and you can easily determine if it is a financial asset.